and a warm welcome to one and all. Now, for those of you who follow me, you know I've got a chaotic personality and a vicious sense of humour. And for those of you who don't, I'm a day trader of the last 20 years, and I'm one of the few that'll trade live in front of you and show statements, etc. Now, I've listened to the feedback of recent. Apparently, you shouldn't be singing so much on the charts, shouldn't be telling naughty jokes, and basically stop being arrogant and having a go at people that are awful. So I've listened very carefully, and I agree there needs to be some changes. So what we're going to do going forward is fuck all. It's going to stay exactly the same. I'm going to be the obnoxious git that you've always known. And yes, the knobheads are going to get it in the arse. And when they're trading 1 minute charts, they can shove it where the sun don't shine. How's that? You like that? Or should we go, well, academically, I could probably prove to you that trading on a 1 minute chart is institutionally frowned upon.
They've done studies, 60% of the time, it works every time.
That doesn't make sense.
What do you think about that one then? Which way shall we go? Well, the thing is, I like a sing-song. I genuinely do. And you should be happy in your job. And it's like, take last night. I mean, Joanne and I went to the pub and they played the twist and I had a bit of a sing to the twist. And then they played Van Halen, had a bit of a jump. And then they played Come On Eileen, and well, that's where the fight started and we got kicked out.
How did that gobshite get on the television?
So, let's carry on. Have all the freeloaders gone yet? I fucking hope so. Anyway, no, I'm not going to change the channel too much. Ultimately, the channel is for me as an outlet just for enjoyment. And I love my job. I love the charts and one thing and another. And over the last 20 years, I've learned a hell of a lot because I journal a lot. And anyway, cut long story short, when I'm talking about various different aspects, it comes from experience. And I think that's the best teacher you'll ever have. Having a hypothetical idea is fine. It's like these guys who say they're going to have 10 prop funds and they're going to use one to go to the other. In theory, it's fine. In practice, it's a nightmare. Because the copying programs don't necessarily work very well. There's constant changes in the rule book, and you're normally left high and dry. So when you focus in on one asset at a time, that is more profitable over the years. Now, that is also the case with time frames, etc. Now, I did a video called Don't Do the Noise or something along them lines. And basically, if you're trading 1 minute charts, you think you're in the motion, you think you're doing this, that, and the t'other, and you can read everything. And let's be honest, I'm going to be as arrogant as it gets here. You're not, you're a dickhead.
Oh, here we go. No.
Because you're not reading jack shit. All you're reading is the noise and the variations. And I see them all the time. I get people who come into my group, and we've changed the group so that it's a singular tier and everybody's kind of singing on the same hymn sheet. But every so often, you'll get somebody who comes in who knows everything, but they've never made a bloody bean in their life, yet they'll argue with anybody. And my attitude to it is very simple. Right, if you're making a living and you've done it for 5 years, I'll listen to the argument you're having. But if you haven't, shut your fucking mouth. Unless you're coming in and you're being polite and just say, well, I'm considering this and I think this might work and this is my reasons. But the other ones don't. They come and say, this is the way, and that's the end of it. Now that, I find, is quite blinkered in the way of looking. Now, people say I'm blinkered. To a degree I am. I haven't changed GoldenEye in decades. Why? Because it was narrowed down to a point that works. But it works for me because I understand what I'm looking at. I hope that kind of makes sense. So what I decided to do was, it's all well and good looking at what I know, because I know Monday morning and Friday afternoon are a nightmare, and I know if you're going sub 15-minute charts, you're probably setting yourself up in for a fall. Whoa.
There you go.
Good girl. See that? She's just got up. She had a wild night last night. Didn't you?
I did.
Big tits. Huge tits.
We might be in our 50s, but we still know how to rock and roll, boys and girls. We still know how to rock and roll. And I like me coffee. Why? Because we all know Scruffy likes a coffee. And if you don't like that phrase, fuck off. So, lost me Fred now. It's a Sunday morning and had a good night last night. Great night last night.
You dirty old
Anyway, let's look at this from academia. Now, everything that we're looking at here is relatively easy to find. Go into Claude, DeepSeek, whatever. They'll pull out white papers from universities, or papers from universities rather, studies from brokers, etc., etc., etc. Now, I gave this quite a good few hours going through it and one thing and another, and I told it that I didn't want anything from YouTube sort of comments. I didn't want anything from blogs. It has to be from a recognized institute and it has to be a recognized report. And this is the findings. So the summary is, the consensus is Tuesday, Wednesday, Thursday are the best days to trade. Monday and Friday are by far and away the worst. And for trading on and everything I'm talking about is for intraday within a 24-hour period. The best time frames are 1 hour and 15 minutes, which so happens to be the time frames I trade. I get everything that I need from the 1 hour. I do what's called a +1 -1 principle. And the 15 minute is the chart of choice. And I'll monitor a 5 minute, but I'm not trading it. So when you see me on a 5 minute chart, I'm not actually trading the 5 minute chart. I'm trading the 15 minute, because when you see me do a candle count back, it's actually the rolling 15 minute what I'm looking at. So there's that. And it says the chart that is commonly recommended to avoid is the 1 minute. There's a shocker. Now this is from institutions who see traders day in, day out across the world, and there are thousands of them. But the Billy Bog who sits in the pub on the stool, who's never made a fucking bean in their life, will sit there going, oh no, I'm in the action. Oh God, look at that liquidity sweep. Oh my God, there's an order block. Oh my God, I'm going to get my knob out and I'm going to play with it because there's a fair value gap. Oh, Jesus Christ. Please give me a break. Sunday morning. Did I tell you it was Sunday morning? I had a good night last night. Did I tell you I was having a good night? Anyway, I was till I got all my emails and the messages this morning, because Jesus Christ, the backlash of that video was unbelievable. Dear. Right. So, as you can see, every single one of these are very well recognized brokers and institutional services. Now, I'm not going to read it all out for you. I'll just kind of summarize it. Basically what it's saying is Tuesday, Wednesday, Thursday are the best, and they rank highly for profitability. Now, let me kind of explain why. It says the worst days are Monday and Friday. Monday is a problem because the markets are setting up. And again, Friday is a problem because once you go past lunchtime, the markets are closing down for the weekend. And Sunday, just forget Sunday. Sunday trading is a waste of time. Spreads are way too high. It's prone to gap. And liquidity is, well, there isn't any, basically. And if you understand liquidity, it's just the amount of orders running through the market. So they're the best days. So why is Monday and Friday terrible? Well, Monday, you haven't really got an idea of how the markets are going to set up. But you've also got one of the main money flows coming in as well. So the main traders, the people who actually move the market, are looking at the markets on a Monday to get a gauge of what's happening. Is it going to be bigger or better than last week? Is it going to be worse than last week? Are we going to go, or are we going to sit out and just see what happens? All these different things. So there's a lot of decisions getting made on a Monday morning. And you could easily get on the wrong side of it. So the rule of thumb is you let the market settle, certainly to after 9, 10 o'clock. Then you start looking at the markets. Now, you're going to have the barstool managers who've got zero idea what they're doing, going, oh, no, it's flying on a Monday, I can make a fortune. Oh, it's starting at 8 o'clock, it's absolutely brilliant.
Boy, that escalated quickly. I mean, that really got out of hand fast.
Crack on. Be right at the right time. Don't just be in the market all the time. You know, less is more. It genuinely is. Now, Tuesday, Wednesday, Thursday, they're good because the markets are settled down. You can get a good feel of what they're up to, and then you can trade with the market. Now, if you're trading against the market, at least you know you're doing it. On a Monday, you don't. It's kind of a lottery as to whether you got it right or wrong. And inevitably, you'll be wrong because the markets are rigged in such a way, they're there to set you up. Now, if you want to go through this very deeply, look at something called K-level thinking. You know, you'll be going in on what's called a K0. In other words, just trading what you physically see at that moment in time. Whereas the guys who move the market, they're up to K3 and 4. They're thinking 3-4 moves ahead of you. So they're already ready to take you out. Now, Friday, it's kind of one of them days that it's okay on a Friday morning because there are a lot of traders moving around. But once you go past dinner time, the markets die off. And if you're on the wrong side of it, you've got to take that through the weekend. And not only got to take it through the weekend, you've got the fear of a gap on a Sunday night. And then if you got that gap wrong, the spreads are wider. So if you've got a tight stop, the spread will take you out. And then you've got to take on the Monday morning. So Friday afternoons is just a no-no. And if you're trying to trade on a Friday afternoon, you want to give your head a shake. And this isn't me. This is in front of you from institutes. So there we go. And then it tells you. Now, this is where it becomes kind of interesting in the sense that there is best and worst time frames. Now, the most recommended time frame, and you speak to any major trader or any major institution, they'll tell you the 1 hour and the 15 minute. Basically, you get your signals on the 1 hour and you execute on a 15 minute because it is the sweet spot. And the reason being is very simple. You're working on a 3-candle pattern, and I'll kind of explain that in just a second. And then it comes down into scalping time frames that are the highest risk. It's between 1 and 5 minutes. And the reason why they're so volatile is they react to anything, whereas you need to have it smoothed out. You know, so for everybody who disagrees with me, just look at these reports and then go historically through the data, and you'll find that when you're back testing, it looks outstanding. But in the real world, your mental capabilities probably can't keep up with the speed of the markets. And you will jump from one side to the other straight away, make the wrong choice. Your risk management will definitely be out the window because you're only getting 1 or 2 ticks. And to time the market to within a tick is borderline impossible, you know, over a long period of time.
Really?
Really?
Okay. And as it says, times for losing money under 1 hour. Okay. So if you're taking your signals under an hour, you're going to struggle. And then it comes down, and then what we have down here is the studies. You know, FXCM, they're a major sort of trading entity. They've seen thousands upon thousands of traders, and here we go. Risk reward less than 1 and 1. You've got a 17% chance of surviving, while strategies with 1 and 1 and higher have a 53% chance. So really, looking after the money is probably where you want to be starting with any strategy that you want to take into it. You know, and it demonstrates traders that have poor risk management, but on any time frame, especially short ones, have a 300% chance of losing. Now, what that tells me is there's too many gamblers in this market. And trading is not a gamble. I've had that discussion as well, and I'll touch on to that. And then finally it comes down. So these are what it says. Best, Tuesday, Wednesday, Thursday. It's your highest volatility, etc. Worst, Monday and Friday. Sunday, just avoid. Time frames for day trading, 15 and 1 hour, balanced. High risk, 1 minute and 5 minute scalping. Worst for losses, sub 1 hour. Okay, and then it goes through. And there you go. There's your sort of breakdown. Now, they're from studies. And I'll take their studies over somebody in a pub anytime. Now, when you're looking at what's called a 3-candle principle, you're looking at a candle to set you up, a candle to pay you, and a candle to get out. It's a 3-candle principle. Now, that 3-candle principle can be overlaid into any strategy. So what it also does, it helps you target, helps you understand where stops are going to be, and then it helps you understand yourself. Because if you're looking for concentration, you often hear sort of best of 3 in one thing or another. It's kind of where it comes from. I subscribe to power of 3 thinking, you know, and if you go through the modules that I do, there is a section on power of 3 thinking. And basically what the power of 3 is, it's like 2 out of 3 ain't bad sort of thing. But think about it this way. If you're looking at an hourly chart and you spent an hour basically working out what the market's going to do and get in, all right, the next hour is going to give you the profit. So if it's got an ATR of, say, 20 per hour, well, then your target roughly wants to be about 20. And then the third candle you use to get out. So basically, you've got enough time to analyze the market, take out the profit that you require, and then get out safely. And that's the key element, safely. Now, you can also now work your stop from that. Where is it going to be if I'm wrong? Well, you can work 3 candles back. You can work sort of 3 levels up, 3 stress points, whatever. I work to 2 stress points, you know. So that way, I've got 3 going for me, 2 going against me. And the theory is quite simple. My positives always outweigh my negatives. And if I'm wrong, I accept it. But as long as I'm doing it roughly the same day in, day out, I need 2 days out of 3 and I'm still profitable. Power of 3. And that's a watered version of it. But I will cherish your thoughts. I genuinely will. And I do take it on board. I know I take the mickey in one thing and another. I hold no malice to anybody. I really don't. Well, apart from the ones who send me death threats. I've got very little time for them. And a lot of the time you can call it tough love or whatever. But I'll just tell you the way the markets are and the way I see it. And it's not open for an argument or sort of I'm better than you sort of scenarios. It's just I'm trying to show you what I've been through. And over the last 20 years, I've been through it all. I've done the scalping, made quite a bit of money, and then lost it really quickly. And the only time I turned a corner was when I started slowing everything down. So the deeper you go into the chart, you think you're involved. You're not. You're actually seeing too little information. But it can go the other way, because if you're looking at a monthly chart, that's not really going to help you in the next 10 minutes. So you've got to find that sweet area, and the hour will do it for you. Because if you work on a 3-candle principle, the hour is going to show you the first half of the session, take a break, then the next 3 candles is going to show you the second half of the session. And you're going to have a good understanding of what that market's trying to achieve. But if you're trying to do it micro, 3-minute candles, you know, 1 minute to get in, 1 minute to take your profit, 1 minute to get out. It only takes one spike and your stops are getting wiped out. The second candle mightn't even cover the spread because the markets mightn't even move that far. And it'll happen so quickly, you won't see yourself coming or going. All you're doing is being a busy fool. Less is more. Look at your hourlies, guys, and you'll find you do quite well. Cherish your thoughts, as always. I'll answer anything. And if you want to speak to me, maybe I shouldn't tell you how to get in touch after this morning. But go to my website, scruffytrader.com. You'll see my official contact details. I'll point you there because there is a lot of copycats out there pretending to be me. That's the only way you'll ever contact me. And at least that way you know it's official. Because I'm not on Telegram or anything like that. So if you ever go on Telegram and you find me, just report it, because it's not. As always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you on the next one.